Hello everyone, I just want to make a quick video about mortgage penalties. When shopping around for a mortgage, it's equally as important to get a great rate as it is to get great terms. Because at the end of the day, you want to be mortgage free sooner with the least amount of restrictions. I want to quickly go through what the difference in penalty would be at a traditional bank, one of the big five, or at a monoline lender. For those of you who do not know what a monoline lender is, a monoline lender is a company who specializes in mortgages exclusively. Banks do a lot of things. Monoline lenders only do mortgages. So for this comparison, I have to do everything equal, so it's an equal comparison across the board. So I'm going to assume that someone is going to be breaking their 5-year mortgage 3 years in, the first step would be to calculate or find out what a realistic fixed rate would have been 3 years ago. So the first thing I did was I Googled historic posted rates in Canada, and back in 2013 the 5-year rate would have been 5.23%. So when you go into a bank, you typically get 2% off the posted rate. So according to this, in 2013, you would have gotten 3.23%. But let's just say you're a valued customer at your bank and they did you a favor and they gave it to you at 3%. So a really good rate for 2013 standards. So let's just jump into it and do it. So at RBC, let's just assume that you owe $500,000. Your maturity date is going to be 2 years from now. So let's just say the 1st of September of 2018. Your payment frequency is monthly. Payment amount is, let's say, $1,800. Date of last payment, let's just say it was today, 26/8 of 2016. Your current interest rate, your very good 3%, and your discounted off posted, which in this particular case it would have been more than 2%, but let's just be realistic and put it at a 2% discount. RBC is going to come back at us with, let's see, $19,132. Okay. Let's try BMO. BMO, you want to pay off your mortgage, you had a fixed rate, outstanding balance $500,000. Time remaining, it's 2 years, so that's pretty easy. Let's put in 2 years. Current interest rate is 3%. And the discount you received was 2%. And you received no cash back. BMO comes back at us at $18,100. So let's try CIBC. CIBC, fixed current balance, we're going to say $500,000. And by GTA standards, $500,000 is not that much. Maturity date is going to be 2 years from today. So we're going to put 2018. Your current interest rate is 3%. Discount received 2 monthly, and $1,800 is realistic for that. And CIBC comes back at us at $23,000. Wow, $23,000. So as you can see at RBC, $19,000. BMO, $18,000, CIBC, $23,000. I think you're getting the drift of the big banks. So I'm not going to do TD, nor am I going to do Scotia, because I represent both those lenders, and frankly, I don't want them to get mad at me. So I'm going to jump right into the monoline lender. This is my monoline lender of choice, which is First National. Broker channel only. You can't walk up to First National and get a mortgage from them. You have to go through a licensed broker like myself. And I'm going to run through this scenario now. Let's just make this. So your current interest rate is 3%. Outstanding $500,000. Your next payment, we'll say it's tomorrow. Original mortgage term is 60 months. Your maturity is going to be 2 years from now, so 2018. You pay monthly, and your mortgage payment around $1,800. Monoline lenders do not use a posted rate, which is the major difference between the monoline and the banks. So they just have their current rate, which is what they use to calculate your penalty, which makes a big difference. And we're going to calculate this penalty. So as you can see, it comes back at $7,541 in comparison to $23,000 at CIBC, $18,000 at BMO, and the gold standard RBC at $19,000. So you're looking at approximately $12,000 more in penalty at the major banks, minimum. So you might be asking, what's the catch, Antonio? And I'm glad you asked, because there is no catch. The terms are generally the same or better, and the rate is typically the same or better. So I want to show you. Prepayment privileges at First National. You can do 15% lump sum, 15% payment increase. You can do a double up and the payment frequency, whichever way you wish to do that. So the double up and the payment frequency, same at the bank and the monoline lender, but as you can see, 15% lump sum and 15% payment increase. You might ask, what's the bank offer? Let's do RBC. So RBC, for example, only allows you 10%. So as you can see, payment penalty is more at the bank. Terms are the same or better at a monoline lender, and the penalty is way less at a monoline lender. So if you know anybody who's shopping for a mortgage, please share this video with them. Let them have the knowledge to make an educated decision on their mortgage, because this is the biggest decision that they're going to make in their lives. And the evidence is here. It's plain and simple. And if you have any comments or questions or concerns, reach out to me at any time. Take care and have a great day.